Hello, everyone. Welcome back to How to Trade in the Switch Markets community. I'm Shane Vernier, and this is the weekly wrap. Today, we're going to go over a few of the key events and what really dictated market structure and the price movement that we saw this week. We're also going to go over a big story that's developing right now today, and it's about Jerome Powell. Jay could be in trouble, so we're going to go ahead and dive into that. I think that there could definitely be a big-time news item that breaks over the weekend because what's starting to happen with Jerome Powell, we're talking about criminal referrals now. This is fascinating stuff. I've never seen anything like it against a Fed chair, but this is fascinating. We're also going to take a look at the inflation numbers. I'm going to briefly recap them just orally here, and then we're going to go over what they've done to interest rate expectations from Monday to now. And it's a very different world right now than it was Monday when we got started with the week ahead, and it always is. There's always a bunch of money changes hands. Some folks win, some folks lose. The way that we like to approach it here on a Friday is to keep momentum going. If you've made money, you've got to keep it going. So I'm going to recap my rules real quick for Friday trading. We're also going to take a look at a natural gas trade idea that we put out yesterday. The gold market, of course, everybody loves gold. We've got a US 500 5-minute chart on the 5813 that I want to definitely go over here. It's sort of developing right now. It's not necessarily, we're close. We're close to maybe having a trade during this session, this live stream, but I'm definitely watching that. And then we've also got a couple 920 daily plays that turned out very well. And one of those that we pointed out, boy, it feels like forever ago, but maybe a week ago, has just absolutely jammed, and we had a 920 on the daily for that DXY. So is the bottom for the dollar in? I don't know. We're going to have to wait and find out. So good to see everybody back. If you have any questions at all, be sure to light up the live chat. This is sort of an open line Friday. There was an old radio show a while back that was huge, and they always did an open line Friday. So if you guys have any questions at all you'd like to ask or any markets you would like to look at, go ahead. We've got a few things planned that we do need to cover, but feel free to ask me anything you like. More than happy to take the time to answer. T. Marina, good to see you. Happy Friday. Happy Friday, T. Always one of our lighter attended streams just because we're on a Friday, and a lot of folks have already kicked off for the weekend and break, especially in some of the time zones that you're watching from. So if you are from the weekend, don't worry. If you're already on holiday, don't worry about it. Just tune in, maybe grab this one on Sunday before you get started trading next Monday. If you're here in the States with me, then it's still midday, mid-morning and where I'm at, midday where you're at, and we're all going to settle in here for a few more hours before we kick off for the weekend. All right, guys, let's go ahead and do it. I want to start off with price action. Let's get right out to natural gas. I put this trade idea out a little while ago. Lita, good to see you, Lita. Always a pleasure. I put this out a little while ago. It's one of these trade ideas that I get a lot of flack for. They go, Shane, that we're nowhere near that entry point. I want something I can do right now. What if I told you that right now you're probably going to lose money? If I told you that, you'd say, well, what's worse, me losing money right now or maybe making money here in a week or so? I would always hold out to make the money. That's the way that I would look at it. David, good to see you, David. Happy Friday. This is a big-time zone. This is a big-time level, and I wanted to cover this because we had a key level that I've highlighted in WTI crude oil for a long time, and this is a real similar idea. This is a real similar key idea. Now, you'll notice my Fibonacci retracements. Typically, I like to be very, very current with them. I go most recent spike to spike, swing high to swing low to keep everything as current as I possibly can so we can attack. I always want to be attacking current price action. I don't necessarily believe that you can go back to 2008 and start pulling levels and trade them effectively. It's great for reference. When you're looking at historic levels, it's great for reference to say, okay, we've been here before. What was happening then? Okay, there's some similarities. And all that stuff's great. And you're going to see that on CNBC with their analysts and everybody that's got a PhD. And they're going to all sit around, I went to Wharton's Business School and back in 1985. No one cares. No one cares. But when we have evidence of a macro wave, we've got to take a look at it, and we've got to be very, very careful with just throwing the baby out with the bathwater and discounting the historic prices. It's hard to deny over the last, really going back to 2021, 2022. Geez, time flies. It's hard to discount the impact that the Russia-Ukraine war has had on natural gas prices. In my opinion, and in many folks' opinion, the natural gas industry has really begun and ended with that conflict. Now, what you have is a massive high, and this was right in the summer after Russia invaded the Ukraine. And we saw highs right up around 10. I was calling for 11 or 12 or 15 because we just didn't know. We didn't know how high it was going to go. Price went up right just short of 10. Key numbers, remember key numbers. And then it just started plummeting. Now, there was a lot of reasons for this plummet. Theoretically, all the embargoes and all the restrictions and everything the Biden administration did to Russia should have sent natural gas higher. The pipeline being blown up, that was a big one. It didn't. And one of the reasons why it didn't was because all of a sudden Russia decided they were going to do business for natural gas in rubles. That made a huge impact. It impacted the U.S. dollar, and it also impacted the price of NG. So all of a sudden there was, not necessarily a lack of NG on the market. You just had to conduct business in just a little different fashion. And a lot of big buyers did exactly that. So what did we see? We saw price really tumble all the way down here. So, fast forward, 18 months, you're down around 1,528. And there everybody was scratching their head going, how low can natural gas really go? And then we started getting into that AI boom. That was May 2024. Oh, AI. And it took us right up there to our 38% level, which is 47, 45. I don't know that natural gas could ever go lower than 1.5. I don't know. I didn't think it could go lower than 2, but it did. So now what are we really expecting to happen here in the natural gas market? Number one, we're going into fall seasonality. That typically means that you're going to see some bids hitting the gas market. Usually we're not going to see those till October. Stick with me. We'll cover natural gas as we need to in the fall. We're not there yet. But this has been a relatively strong 50 days right here for the natural gas market. And you say, Shane, it hasn't really moved in June and July. Yeah, but they're not big negative prints. It's sort of solidifying right around that non-committal area, right around our monthly Bollinger midpoint. It's not an accident. You got a 13-month EMA down there, 13-month EMA right there at 3308. And you got rotation right in that zone for the last, let's see, that we tested it there. And then the last 3 months, we've rotated in this area. What I'm trying to say is this market should be bearish, and it's not. Anytime we see something that's sort of bucking the fundamentals, it's bucking seasonality right here, I would be looking to sell. I still want to sell, but I got to get great trade location. Good trade location's not good enough in a market that's this flat. We're trading in a very tough, really a tough market structure. Very difficult to pin this market in the last 60 days. A lot of traders have gotten destroyed trying to trade natural gas. It's up, it's down, it's up, it's down. Okay, fine. Let's let this thing make its move, and then we'll make ours. So when this breaks, 38% right up there at about 47, 4745, maybe 47 even. That could be just an absolute fantastic trade, and that's a trade idea that we put out a little bit earlier today. So I would definitely keep a close eye on this market. I think it's an interesting one. I stopped covering natural gas day to day because it really got difficult in these real tight monthly ranges, and it got very choppy. And a lot of folks were trying to trade gas, and I was saying, you know what, there's a lot better markets out there. This is a tough one, but we called it perfect, that 38% last time. This level is the game. Am I bearish or bullish? I'm still bearish, kind of, but I'm not bearish from here. I'm bearish from up here. So I guess you'd say I'm neutral. I'm net neutral right now. All right, that's a long way of saying sit on your hands and you're going to be okay. Yes, sir, good to see you. Hey. All right, guys, and if you want to trade anything at all under the sun, head on over to Switch Markets. Thousands of products, thousands of markets. I was looking for the natural gas CFD earlier today. I didn't see it, but that doesn't mean it's not there. They literally have just an absolute ton of markets to trade. Zero commission accounts, low spreads, all that jazz. No Donation Friday is what it is today. I love No Donation Friday. If you're having a winning week, half of the money goes in your pocket. Think of it as a piggy bank. Load up your piggy bank today. Losing week, if it's a small one, trade as usual. If it's a big one, scratch it, come back Monday. That's what I would advise. If you're neutral, if you're right around scratch or break even, trade as usual, reduce your leverage, or don't trade at all. It's that easy. That's sort of what I've come up with over the years to manage Fridays and keep my momentum going into the weekend and also into Monday's session. Remember, the best trades are next week. Next week always has the best trades. Let's make sure we're alive to trade next week. Week 29, it was a banger. Monday, we spent it game planning. Very slow news day. Didn't really have much to do on the markets. Tuesday, U.S. CPI. That was a big one. CPI sort of mixed. One, the media sort of grabbed and ran with that CPI number that came in a little bit above what we expected, but core CPI was the real story because remember, core CPI stripped out the energy and the food costs, and you saw really a retraction in consumers, beat expectations in the consumer spend, not consumer spending, but consumer pricing, and then Wednesday was PPI. PPI came in flat. It actually did come down month over month. That was amazing. And then you saw Thursday was retail sales, strong retail sales print. It was a strong print. A lot of folks were really happy with that print. Maybe that recession's gone. I'm still saying that you're probably going to have a negative Q2, but it's starting to look like it's in doubt. Retail sales was good. It wasn't bad. Today we had housing starts in the University of Michigan survey. I'm going to briefly touch on these. Building permits, building permits are temperamental. They typically are seasonal. But what these tell us, it was a nice bump in building permits, a nice bump in housing starts from negative 9.7% to 4.6%. This is all interest rate expectations. The developers are betting that you're going to get cheaper money this fall. So what do you do right now? If you want to line up your fall or winter or maybe even next spring projects, what do? You pull the permits and you get rolling now. Housing starts, those are projects that are already underway. So I always look at real estate as being a potential leading indicator. Now the Michigan Consumer Sentiment Index, it used to have a lot of punch. Institutional traders, they could actually pay a little bit more to get that number. I believe it was 10 or 15 seconds before the public would get it. It was completely unfair. It was completely a rigged game, but it used to really move the markets. It doesn't anymore. I don't know if people just got sick of playing survey data from the University of Michigan, or maybe nobody's a Wolverine fan anymore. I don't know, but I will tell you, when I first started, we were sitting around, watching the UM index, and it doesn't matter anymore, really. It doesn't. So what did it say though? Consumer sentiment right there is at 61.8. That was above 61.4 expected. It's still low compared to where we were last year at this time, and we weren't really in a great place then either. So there is a lot of room for improvement with this sentiment index, and you have to still believe that inflation's a huge drag on it. Atlanta Fed GDP now, like I said, this doesn't matter. 2.4%. That's their projections for Q2. Essentially unchanged. I don't know. I think that's a fugazi. I would throw that one out. I wouldn't really be looking at that as being much of anything. I believe Atlanta Fed, though, is Raphael Bostic. He is the FOMC member that runs that show. So maybe there's an agenda there with that number. Maybe there isn't. Always hard to say when you're dealing with the Fed people. And we're going to talk about some potential trouble. Jay Powell's in here in just a minute. Let me see, David, what do you think about the Great Britain pound USD or the Euro USD right now? Yeah, I think those are good markets. I'm more than happy to cover them. Like I said, any markets that you'd like to cover today, that's what Fridays are for. I'm more than happy to do that. I'll do that in just a second. Right here, I did want to look at our 5813 on your MT5 platform. We had an interesting engagement yesterday on our Switch Markets webinar that we did exclusively for the Switch clients. And of course, if you guys wanted to join, you're always welcome. I don't keep anybody out. You come on over. But we had a pretty good trading session. We traded a 15-second play on NASDAQ futures that actually did end up cashing in a little bit later in the day, but it was a tough trade. We almost got stopped, and then it went up and got its points, and then it came back down. Excuse me. This is a challenge. Anytime you're trying to trade, I would say a Friday, and you're trying to trade the U.S. indices intraday using something like the 5813, if I was going to do it, it would be very low time frames, 5-minute charts, 1-minute charts, and I probably would already be done doing it. Probably would have done it an hour after the open, maybe. I want maximum volume, and I want to be able to get in and out of these trades before the liquidity and the volume really dries up towards the end of Friday, as it does every single week. So what we're looking at right here is your US 30, a daily chart, and the reason why I highlighted this is because we have an interesting thing going on here. Now, it's a daily, okay, so theoretically, we're looking for a crossover and a close. Now, we sort of had some real tight, looks like a little weave area where you had a cross under, a crossover, but the pricing didn't really get established on that crossover beneath your 13. Right here, I don't believe the crossover set up. It just got turned into a real set of garbage. I'm interested in this. I'm not necessarily interested in playing a short in the US 30 as maybe a position trade or anything like that, but you could take a good look at what happened here. Right there, there's clear as day as your daily crossover. There would have been your entry right after the crossover when it becomes official, and you would have got just a heck of a move in. That's great. I think that we could definitely trade down from where we're trading, and I think the catalyst for that could be our Q2 final numbers. I'm interested in this. I think that we may be, I would much rather be selling from right up there around 45,000. That was our trade ID originally. But I'm sort of watching this one closely on the daily time frame. I think that potentially if we get a couple big negative days, maybe out of the US 30, then we could look at maybe getting short. I'm going to have a pin in that. We're going to talk about that next week a little bit. But I do have the US 30 on my radar because we couldn't crack that 45,000 level. We tried it right back in here. We couldn't get established. That may be an intermediate term top. And if the sellers come in from this zone, man, they could nail us. I mean, they could nail us down to the 42s, 42.5, something like that. It could turn out to be a pretty good position. So I'm going to take a look at this crossover, and I'm watching very, very closely on this US 30. Okay, next order of business is going to be the Great Britain pound of the Euro USD. We had a trade ID out in the Euro USD earlier this week, and we just missed. I hate saying that because this is one of the problems with trading with horizontal levels. And remember this, no matter however you trade, whatever you trade and however you trade, you're always going to be giving something away. That's the nature of trading. I don't care if we're trading horse blankets, beef jerky. I don't care if we're trading whiskey, if we're trading money. I don't care what we're doing. We're trading cattle. We're trading horses. You're always going to give away something to get something back. And you need to look at your trading strategy like that and understand that none of them are perfect. Those crossover strategies, you're going to potentially get in on some big moves. There's no two ways about that. That's what those are for. That's why they're so popular. But you're also going to fall into flat markets that are going to chop you to death. That's the trade-off. That's the risk and the reward. With horizontal support and resistance levels like I'm a big fan of, whether it's key levels, Fibonacci's, whatever, even treating moving averages as support or resistance, the toughest thing to do is to get in on it. And we talk about, here's your entry point, there's your key level. Do we want to shade it? And I said, yeah, you want to shade a little bit to make sure that you get in on this. Well, our shade wasn't aggressive enough. It wasn't good enough. I was at 115.37. I believe our entry point on this was 115.45-ish, somewhere in there. Where did we go? We went to 115.56. There's no way that we can ever know how far a market's going to go. I mean, that's just the honest to God truth. Now, there's ways that we can read order flow and understand this. Okay, this is highly volatile. We're in a serious situation here. Yeah, that's true. But when I have a horizontal line or a happy zone, as I call it, or a kill zone, all I can really do is wait for price to come to me. And if it doesn't come to me and we have a near miss, and we've had several of them in the last 6 weeks, then we just don't get the trade. That sucks. That's a tough part of trading. But honestly, it is what it is. It's part of it. You can't sit around and, go in the other room and kick the cat because I just missed my entry by 5 pips. I've been there. And hey, listen, when you need the money too, when you need the money, you're like, hey, listen, I got to pay the rent, or I got to pay my mortgage, or I got a car payment, whatever it may be. You go, man, I needed that trade. I did everything right, and I didn't get it. That's the markets. That's the markets, and that's one of the worst parts about trading these levels and these zones is it has to come to me perfectly or else I don't get them. Now, on one respect, when it does come to me, I know we got a great shot to win. But the other respect, you do miss out on a lot of trades, and that's why a lot of folks love crossovers. They really do, or the 9 EMA strategy. We've got more feedback on those strategies than any of the other ones, by far. And those are designed to always keep you in the market. Or an orb, people love the orbs. I'm working on a new video right now on the orbs. We're going to drop on how to trade, and it's how to trade an orb with better trade location. And I'm going to show you 3 ways to do it. Something to think about there. That one's going to be coming out probably late next week, I would think, maybe the week after. Still building a lot on our plate over here, but right here, we just missed it. So to answer your question on the Euro USD, I'm still bullish. Very bullish. I think this could just be a short-term correction. Would not shock me if next week we sort of grind higher from here. I do love this sequence, though. So if we got a big sell-off, you still would want to go long on a scalp from here. It's not as good as it was, though, believe me. But somewhere right in there, you could probably get 25 pips off of maybe a 115.40 trade. But 62% down here, very good. Now, I don't ever say this, what I'm going to say right now about the Euro USD, but I will tell you this. 50% retracement level, 13-week EMA, key number, 114.50. 50% retracement at 114.47. 13-week EMA is right around 114.50. That's going to be a pretty big support zone. So I would be diving in and trading from there, and I would also be trading from there, from the back end of the golden zone. I mean, that's a beautiful thing. So I'm watching the Euro USD closely. I think there's some opportunity here. If you want to go to the shorter time frames, you want to just keep working it down, I really don't see the point of doing it. This is ugly. I think I got a comment. I said Christmas sweater ugly the other day. Gentleman said, "Oh, my grandma's mad now." Yeah, well, I mean, most Christmas sweaters aren't much to look at. That's for sure. Neither are bowling shoes. But this is ugly. I mean, this is ugly. There's no two ways about it. So I'm waiting for this thing to break. I don't like my level as much as I did, but I'm going to stick with it because it's a pretty strong level. This down in here, this 50% zone, much better. But on a daily time frame, I can't see making any meaningful decisions right now on that. If you wanted to go down, I mean, we could go down to a 4-hour and try to find a trade. Yeah, I would stay out of this. It's too tight. We want to see disequilibrium of pricing. We want to see a big move. I'm waiting. I'm on the sidelines right now for the Euro USD, although I maintain a slight bullish bias. All right, Great Britain Pound USD. Let's have a look. A little bit different here. 4-hour chart, nice big sell-off. You sort of, I mean, looks like that's where all the money, not the money went, that's where all the action went. So now we're coming off a little bit. Let's try our weekly out here. The odds are it's going to look real similar. No, it doesn't really at all. You can see we've taken out that swing low. That swing low right there that developed back on the 23rd of June, and now we're beneath our 13-period EMA. I'm more inclined to want to sell this one as opposed to the Euro USD. I'm still bullish. Believe me, the trend is still there, but this range is big enough to where we can maybe go down to a daily and see if we can maybe hop a wave and do some surfing. All right here. Let's see if that's our spike we're working off of. High right there is 136.20, 136.19. Nope. Right there is going to be the spike that we've based our ideas off of thus far on a daily time frame. Spike high right there. Spike low. Jesus, that's like a magic trick. Take a look at that. Spike high, 136.81, something like that. Let's dial this in exactly. If you're going to trade these levels, I always recommend dialing them in exactly. Make sure that they are perfect. How do you do that? Well, you do it just like this. Go right over here, cursor over, 136.81. And your numbers may be a little bit different than mine, depending on what exactly, what platform or what broker you're using. That's okay. They're usually within a pip or two. Low, 133.65. Okay, there it is. I mean, that's good stuff. It really doesn't get any better than that. That's a perfect strike. 134.86, 134.85, and then you get the big sell-off. And today we even made a run at it again. High was 134.75. So I would be sitting right up there with a sell to join this downtrend just because this range is big enough for us to attack. I have no desire to sell the Euro USD. I would consider selling this Great Britain Pound USD if we got right up to our happy level, our kill zone at 134.85, or even if you got up to 135.60. Those are pretty strong zones. Those are pretty strong zones for at least the short term going into Monday. That's probably what I would be looking to do as a basic game plan to kick the week off. That'd be something like that. So that's how I see the Great Britain pound, the Euro USD. Let me see. David, I'm currently on a long position on them. Yeah, listen, you're not wrong. You're reading the trend correctly. This Great Britain pound USD, I'm a bit more skeptical about holding longs, even though the long term, I mean, let's take a look at the monthly retracements and see if we can find a nice buying zone, or maybe you bought perfectly. I mean, there's no question that we're in an uptrend. I'm not even contesting that. But as far as buying right now, your trade location's a bit questionable, just because we're buying sort of I don't know. I mean, I would much rather see a much deeper correction here on the Great Britain pound USD. Then I could step in right in there and nail that with a lot of confidence. But I don't hate your trades. I think you're bullish. I think that's the correct read. If you're betting against the U.S. dollar, you're probably doing pretty well. Even on an intraday time frame, it looks like the DXY is off a little bit. So there's nothing wrong with what you're doing. Just be sure you're managing risk, because it is choppy. Things have gotten choppy. This isn't the free-flowing trends that we've seen over the past several months. Good stuff, though. Let me see beef jerky. Absolutely, T. Marina. Trading beef jerky, trading cattle. They trade cattle around here. Cattle, land. I've heard of guys trading land. Do the old 1030 exchange so you can get out of your taxes. That's what the old farmers do. Anytime they want something, they want to go buy a vacation home, or a lot of them are incredibly wealthy. They want to go buy a condo down in Cabo, or they want to buy a vacation home in Florida. They do a 1030 exchange so they get out of the taxes. They trade a little bit of land. They trade some land for the other houses. Believe me, land trading is still very real, and they got some really smart accountants and powerful mental framework to get in there and figure out how to work the taxes to their advantage. It's brilliant. 1030 exchange. Look it up. Can we check out the gopher? Oh boy, what is the gopher? The gopher. I don't remember that one. I remember the cable, the guppy, the gopher. What's the gopher? I guess I could Google it real fast. This guy doesn't even know what the gopher is. I think you're testing me. Okay, dollar yen. Thank you. I call it the dollar yen, or just the yen. All right, this is interesting stuff right here. This is sort of what we've been waiting for. Monthly chart. Reason why we're sort of working on the monthlies, you had double inside months, and now the break is on. I'm going to take a good look at that moving average and see how it did short term. We broke above the 13-period moving average. I want to be long. 50% doesn't mean anything to me. Yep, got you, T. 50% means nothing to me. I'm not interested. What we're looking for up here, 62% is an obvious sell in my book, 151.66. But boy, even up in that 150 area, that's a key number. You're probably going to get some sellers there too. But I'm going to go ahead and wait. Now, right now in the short term, this may be one that we could sink our teeth into. I want to go right down to the 4-hour chart and see where we're at. Okay, this is beautiful stuff right here. Not really much resistance at all. That was probably your proximity test. Proximity test right there off of that moving average right there. That turned out very well. This right on that 38%, okay, that was pretty good too. And then this trade right here just didn't work. High right there is 148.15. The low there is 147.88. So you got about 25 pips off of that moving average. But once that thing broke, Katie bar the door, right? Went up, and then we got the crazy action right there. What was that? Let's see, July 16th, CPI or PPI. I think it was PPI or CPI. That right there was CPI. That was PPI. Those numbers destroyed our moving average. So we've got a moving average here. 148.13. I think it's as easy as buying that area for now. That area, what once was resistance, is now support. I do like buying that moving average to really go with our bullish read on this market. Listen, I'm not crazy bullish. I'm not running through the street going, hey, play the dollar against the yen. I'm not saying that at all. But I think for a scalp, maybe an intraday trade, you've got the makings there maybe for a 25 pip risk, looking for 25 pips off of that 148.15-ish level, somewhere down in there. That's not the worst trade I've ever seen in my life. I like my macro levels better, though, as far as, monthlies. Listen, a lot of people don't agree. They don't believe that you can trade like this. I let the track record and the trade ideas speak for themselves. They don't all win, and when they lose, we lean into them and try to figure out why they lost. But man, when your big levels come into play, it's important to trade them because, listen, there's so many markets out there. You're always, even with monthly and weekly and daily retracement levels and moving averages and all that, you've still got a great chance to make a lot of trades. You really do. It just takes more work. And a lot of folks don't want to put the work in. They want to find a live market. They want to sit there on a 3-minute or a 2-minute chart. I've had a lot of traders that trade a 2-minute chart. I don't understand why. I really don't. But that's the time frame they like. And I say, okay, there's 30 bars in an hour, and they want to sit there and they want to trade one thing that's on the move for 5 or 6 hours, and they want to walk out with money every day. And I always try to explain. I said, listen, we're not factory workers. And believe me, I worked on an oil rig, and I remember, we were 16, 18-hour shifts, and a lot of it was just waiting to do something, hanging out in the semis, just waiting to get out on the rig and actually put in an hour or two of work and then go sit down for another 8 hours. That's really what the job was. This isn't like that. This isn't like this. We're not getting paid by the hour here. I don't care if I get 5 trades a year. If there are great trades from great levels, then it's just about me adjusting the leverage and figuring out how much money I need to make, and my maximum exposure on each trade. That's all it becomes. So that's in that respect, this macro analysis goes right over a lot of folks' heads. And I don't mean it to. It's just like, wow, man, if I'm going to put a trade idea out there and do some analysis and somebody asks me what I think, I'm going to put out there what I really think and what the best possible way to succeed is. And, the trade ideas aren't necessarily to everybody's liking. They go, Shane, you're looking at a monthly chart. And I go, yeah, I am. You want to know why? Because in the short term, all I need is a little bit of a ripple in the tide right there at 150, 166, and I'm going to get paid. And that's what I'm looking for. I'm looking for high winning percentages, and I'm looking for constant payoffs. I like cash flow, guys. I like cash flow. I don't like to sit around trying to pick the next Bitcoin. I really don't. But that's my personality. You may love to trade on a 2-minute chart all day long, and that's great. Go for it. Let me see, David. I took your Euro USD buy position that was posted 3 days ago. Right on. How'd you do? You should have done pretty well. I swing trade, so I usually take the trades on the daily time frame, but it seems the price is yet to hit the 38% Fibby on the weekly. It hasn't hit it yet. No, it hasn't. We've been watching that one, stalking that level. I've been in the bush. I've been stalking that like a cheetah stalks a deer or a gazelle. I've been watching that level. I hit it. I will tell you this before we move on to gold. I got to do gold. Everybody loves gold, but I will tell you this type of stuff right here. This is 6E. This is the 6E contract, CME, Euro FX futures. Man, that was good living right there. That was good living. 38%. Essentially, it's the same market structure. The difference is the futures had a little bit more volatility and went down and touched it. 116.10 was the level. What did you get? 116.01 before you got the big bounce up. That was really a fantastic trade. Fantastic trade. Little bit more action in the futures market than that great big spot euro dollar, but nothing wrong with it. Whatever you're trading, keep trading it. Always got to be patient. I don't have as much confidence the next time down, but I think you still got to be, thinking about that trade idea. 38% is huge in this market, but I will say this. If we open next week and we break deep, we break beneath this week's low and get right down there to 50%, 115.24, 13-week EMA plus the 50% level, that's a situation where I'm going to trade the 50%. All right, let's take a look at gold. Biggest level in gold right now is 3,500, no question about it. This has been a killing field. I took my lumps this week in gold. Gold futures was not much fun. Got involved in that volume that we went over the other day. But something like this, I'm going to be a net seller from 3,500. If we get another shot right up here, we were selling, I believe, 34.95s, something like that, 34.94s. Yeah, that's hammer time. We're taking that sell all day long. But once price breaks above 3,500, then we start thinking 3,750, 4,000, the next round of key numbers. And I think it can happen. It's really hard. I mean, gold is tight right now. Listen, this was wide open. The world was going to war, World War III. You had a lot going on this last spring. Things have calmed down dramatically. Now, some of that's the summer doldrums, and I get it, but you've got monetary policy uncertainty. You've got war uncertainty, looks like maybe just a little bit more. Not necessarily that there's certainty in these wars, but the markets get used to things. They get used to it. I mean, I don't understand it, but the market can get used to anything. You could light off a nuclear weapon one week, and in a few months after the dust clears and all the damage was taken in and all the new trade routes and logistics all got solved and people were dealing with the humanitarian fallout and the crisis, once all of that became a known entity, what we call a known, the markets would seek a level and even out. Now, they may be way down from where they were. That's one more than likely that would happen. But once it hit a level of fair value, things would even out. And that's exactly what's happening in gold. We know the world's on the brink. It's felt like it's on the brink for a long time now. And you've got an area of fair value that's established right around what? I mean, I would say this low right down there, 3120. So I would say probably right around here, maybe 3250 to 3500. That's an area of fair value for gold. So I'm still bullish. You can't really mess with the long-term bullish trend here, especially if they're going to cut interest rates. But if we're talking, what do I do today with gold? Lee, I have no idea. No idea. We could go down to a 30-minute chart. I can give you an intraday trade potentially. Even that, I mean, that's worse than ugly, guys. There's just no action there. You don't trade that chart. You don't trade that chart. 3,500 was what I'm watching in gold. We got to get a move though. But the world has got used to its situation, and that's evidenced by the gold market. There's no question about it. All right, guys, a couple more things, then we're going to go ahead and put a pin in this one. This is the big news that you need to be watching this weekend. I just did a quick Google search of Jerome Powell. Can Trump fire Powell? He lacks the case. Now, I want everybody to know these. Look at the dates, 6 hours ago. Can Trump fire Powell? Fed Chair Powell responds to White House questions about HQ renovation. There's a criminal referral in this. Fires back after ostentatious renovation. Daily Beast. Let's go to CNBC. There was a criminal referral. Let's see. Federal Reserve Chairman Jerome Powell formally replied to White House OMB Director Russell Vaught's July 10 letter, which asked pointed questions. Powell explained the reasons the project cost had exceeded its initial budget. He's in trouble. He's in trouble. They're not just a little bit over the budget either. They're way over the budget. Vaught's letter was the latest chapter in Donald Trump's campaign to pressure Powell to step down, and that's exactly what's happening here. They have him potentially perjuring himself in front of Congress at the biannual, and it's not a meeting, but he addresses Congress twice a year. He answered pointed questions then about what the heck's going on with this building. Why is this building so far over budget? Why is it behind? What is it? And supposedly there's some real lavish things that are going on in this building, and some of the spending of the $2.5 billion that they're building this thing with are really in question. Jay Powell's at the head of that. Chairman Jerome Powell has grossly mismanaged the Fed while continuing to run a deficit, yada, yada. Now was way over budget on the renovation of its headquarters, now up to $2.5 billion. They're running $700 million over budget. This guy's fired, man. I mean, I really don't care at this point. Where did the $700 million go? Listen, I was in construction. You have overages and you run long, and I get all that. But you start talking about $700 million. Who got that money? Where did it go? It went into it was a Washington, D.C. black hole, and a lot of people got paid. Powell's in trouble. And I think that he's going down. So we're going to see exactly how this pans out. Be ready for more of these news items over the weekend. They could definitely impact the U.S. dollar. Why is Powell important? This right here, here's your rate cut schedule. It's improved a little bit. Now you're up down to just only a 95% chance that we hold firm at the July meeting, which is going to be the 30th, which is still a couple weeks out, but still 95%. This is the one everybody's watching. Now our building permits are up, so now it's about a 60-40 that you're going to get that first rate cut. Well, where are we at by the end of the year? That's what I want to know. What do we got there? 43%, 63. So we've got about a 60-something% chance that we're going to get at least 2 rate cuts. If, in fact, there's a new Federal Reserve chairman or an interim chairman, if Powell's gone, what happens to our expectations then? The next person will cut, and cut some more. And that's probably going to be the biggest story in finance. Is if Jay Powell exits stage left. There was I'm not going to report it just yet because I've heard a lot of scuttlebutt this morning, but there supposedly was a criminal referral coming out of the House of Representatives against Jay Powell. Now, who knows if he gains any traction, but that ain't good. And that's the kind of thing that can make people step down. $700 million over budget. How's this guy running our monetary policy if he's $700 million over budget on a stupid building? Why does the Fed even need a headquarters? They just get together for a few meetings, go down to the Hilton like everybody else, get the conference room. They'll bring you coffee all day long, I promise. They're the nicest people around. All right, guys, I'm going to go ahead and get going. I think I've ranted long enough. Leave it alone. That's what we can do. Yeah, that's what I would recommend. Let me see. T. Marina, J. Powell's answer to Congress. We are not in a real great place. I wanted to hear that. If he actually sat there with Congress and said, listen, we're a little over budget, but we're in a real good place with this building. $700 million over budget. You're fired. Why was he running the project to begin with? Who is running the project? Is it him, or does he just write the checks? Good Lord, that's tough. A couple more things in the market we do need to look at, though. Too much opinion today. This right here, this is probably going to be your late day buy in your US 500. We were right beneath that 30 level. We were at 27 something. We came right in there. That would have been your bid right in that zone. No, you got to get your crossover. There's your crossover right there developing. So your bid is going to be right here on this bar close. That would be your bid in the US 500, playing a bullish run towards the end of the day. This is your 5.813. It's not the worst. If you do get that crossover, though, disco, stop loss, profit target, and you'd be looking to play that run maybe up into here. It's really hard to do that on a Friday, though, guys. Really hard to do that on a Friday. The other thing that I did want to point out here, dollar index. We're going to be referencing this one. We put this in our Switch Markets newsletter earlier this week. Is the bottom in. Interesting. There was your buy signal, 920 crossover on the daily. Interesting stuff there. This right here, though, has been an incredible pick. When we start talking 920 crossovers with crypto, we ran and raved about Shiba Inu when this one came across the board. And look where you went from. You went from 1240 up to around 15. It's pretty good. It's a pretty good little payoff. 700 over budget. 700 million, Clive. Sorry, my apologies, Clive. 700 million. You know what happens when I go to the grocery store and I spend an extra $25 on maybe I wanted a T-bone steak or something, and I come home and deal with the missus. She wants to know exactly where that 25 went. She says, why did you run long? Why are you $25 heavy on this? I said, honey, I got us some steaks. She said, I don't want steaks. You got a budget, son. Make the budget work. That's just the way it is. All right, guys, I'm going to go ahead and sign off. Keep an eye on the J. Powell story, though, because that thing is coming to a head quickly, just like the Epstein stuff against Trump's coming to a head. I mean, we're in complete political mode, political scandal season, and the Fed chair is going to get drug into this, it looks like. So we're going to see exactly how this pans out in the next few days. I want to thank everybody for joining us this week. Next week, we'll be back. I'm going to post a schedule here probably in a couple hours. I'm going to get that up and running, so we're ready to rock and roll and hit the ground running Monday. A lot going on politically. Market-wise, I didn't love last week. It wasn't a great week for me personally, but the last few have been pretty good. I think next week's going to be decent. We're officially in the dog days. We're going to talk more about that Monday and a few things you need to watch out for when you're trading this stuff. All right, everybody, I'm going to go ahead and sign off. You have a fantastic weekend, and as always, trade the action well, and we'll talk soon. See you.